Welcome back to Investing Talk Podcast. Today, we're taking a close look at KULR Technology Group. Now, this is a company that's been making some waves with its unique blend of cutting-edge energy solutions and, well, a pretty aggressive Bitcoin treasury strategy. The big question on everyone's mind is KULR a good time to buy now? Before we get into the details, if you find our discussions valuable, please think about subscribing, maybe liking this, leaving a comment. We'd honestly love to hear your thoughts. And hey, if there's a specific company you want us to investigate, just drop it in the comments below. Your support, maybe even buying us a coffee, it really helps us keep bringing you these insights.
Okay, so KULR. It's interesting how they position themselves. They actually call themselves a Bitcoin plus treasury company and even a Bitcoin first company.
Yeah, that's quite a statement, isn't it? Right out of the gate. Especially for what looks like a tech company.
It is. And what's fascinating here is how KULR is building this portfolio of frontier technology businesses. They're really spanning a wide range. You've got high-performance energy systems, sustainable energy management, even dipping into AI robotics.
Yeah.
But the core, I'd say their expertise lies in advanced energy management and cutting-edge energy storage solutions, especially for really demanding environments, think space, aerospace, defense applications.
So it's not just the Bitcoin play then. There's some serious tech underneath all that.
Definitely not. There's a real technological foundation there.
Okay, so with such a broad scope, what are some of their key offerings? It sounds like they're touching a lot of different advanced sectors.
Yeah, their product lines are quite diverse. For space, they've got the KULR One space battery systems. These are designed for missions where, weight, size, and extreme reliability are absolutely critical.
Right, like satellites and things?
Exactly. Then there's KULR One Air, which is for UAVs and UAM, that's unmanned aerial vehicles and urban air mobility, another high-growth area. And beyond just standard products, they also do custom battery design for specific client needs. Then on the thermal management side, which is, crucial for any high-performance electronics, they have the thermal runaway shield.
Ah, yes, I've heard of that. Preventing battery fires, basically.
Pretty much. Preventing catastrophic battery failures. And they also have the PCM heatsink, which helps absorb intense heat in tight spaces. And connecting it to current trends, their Zero Vibe fan is specifically designed for cooling places like AI farms and data centers. Lots of heat there.
Right, that makes sense. Now, I also remember reading something about them getting into robotics. How does that fit in? Exoskeletons, even.
Yeah, that's right. They have a strategic partnership with a company called German Bionic. It's for the 7th generation EXIA exoskeleton.
Okay, so batteries to exoskeletons. Seems like a bit of a jump.
Well, they don't see it as just a random leap. They view it as a significant market opportunity in industrial labor augmentation, basically making manual work safer, more efficient. And it does leverage their expertise in advanced power systems and material science, so finding new applications for what they're already good at.
Gotcha. But let's circle back to this Bitcoin first thing, because that's what really makes KULR stand out, doesn't it? How deep does that run in their strategy?
Oh, it runs deep. This really raises an important question about their whole strategy and, frankly, their financial profile. KULR is explicitly allocating up to 90% of its excess cash to buying Bitcoin.
90%? Wow, okay.
Yeah, and it's not just buying it on the market. They're pursuing a dual approach. They're mining Bitcoin and purchasing it directly.
So they're really all in on that.
It seems so. This aggressive strategy means Bitcoin forms a significant and highly volatile part of their balance sheet and their growth plan. So when you invest in KULR, you're effectively investing in Bitcoin's volatility and potential growth, right alongside their battery tech innovation.
Right. It's like two investments in one almost.
Yeah.
Makes it a very unique case.
Absolutely. A truly unique investment case.
Okay, let's dig into their recent numbers then. Their Q2 2025 financials came out August 14th. And the revenue figures, they looked quite impressive. A 63% jump year over year to $3.97 million. That actually beat the consensus estimates.
Yeah, it was a strong beat. Their product sales were a big driver there, up 74%. That's substantial. Management was highlighting it as their highest revenue quarter ever.
Highest ever, okay.
Which certainly suggests, an operational turnaround in their core business. Maybe better execution, stronger demand for their specialized products.
But here's where it gets really interesting, maybe a bit confusing. KULR reported a net income of $8.14 million, or 0.22 cents per share, which is a huge swing from a loss last year. So the net income looks fantastic, but didn't you say a lot of that might be Bitcoin related? How does that change how we should view their profitability?
You've absolutely hit the critical point there.
Yeah.
We connect this to the bigger picture. Yes, that net gain was primarily driven by the mark-to-market valuation of their Bitcoin holdings.
Mark to market, meaning they just valued their Bitcoin at the current price, not what they bought it for.
Exactly. The financial statements reflect the current market value. So while it looks great for the bottom line this quarter, it really underscores the extreme volatility baked into their earnings. A huge chunk of their reported net income isn't from selling batteries or thermal shields, it's from Bitcoin's price going up.
Okay, that makes a big difference. But you mentioned an operational turnaround. How does that square with the fact that their operating loss actually increased in the same report? Seems contradictory.
That's a very sharp observation. And yeah, the operating loss grew. It went up to $9.45 million compared to about $5.3 million the year before.
So why? If revenue is up.
Well, it was mainly due to higher SG&A expenses, selling, general, and administrative. So more spending on advertising, marketing, also stock-based compensation. Plus, they increased their investment in R&D.
Okay. Investing for growth then.
Right. And their gross margin also dipped a bit, down to 18% from 24% last year. They said that was due to some unexpected labor hours on technical projects. So it really shows the company is still in this aggressive growth and reinvestment phase, pouring money back in.
Which impacts the traditional profit metrics right now, even if revenue is climbing.
Exactly. Operational costs are up.
So given these big investments and this unique hybrid strategy, how healthy is their balance sheet? What's their financial foundation look like?
Well, they reported a pretty strong liquidity position. They had $24.73 million in cash and accounts receivable as of June 30th, 2025. And their Bitcoin holdings are substantial over 1,035 DTC. Management even reported a BTC yield approaching 300%.
Okay, BTC yield. What does it mean exactly? Just that their Bitcoin has gone up a lot since they bought it.
Essentially, yes. It means their investment in Bitcoin has appreciated by about 300% from what they originally paid. So a significant paper gain on those holdings.
Gotcha.
And what's maybe even more interesting is they secured a $20 million credit facility with Coinbase.
To buy more Bitcoin.
Yep, to fund further Bitcoin accumulation. And they used a portion of their existing Bitcoin as collateral.
Wow. Doubling down.
It certainly shows their commitment to that Bitcoin treasury strategy and their ability to leverage those holdings.
And I also saw they did a reverse stock split, 1-for-8, and they joined the Russell 3000 index. What does that mean for investors? Just noise or something more?
No, those are strategic moves. The reverse stock split 1-for-8 was likely to optimize market dynamics. It reduced the number of outstanding shares from around 300 million down to about 40 million. This can make the stock price look more substantial per share, potentially broadening investor appeal, maybe attracting more institutional types.
Okay, so not just cosmetic.
Right. And joining the Russell 3000 index. That definitely increases their visibility, especially to institutional investors and index funds. That can lead to new capital flowing in. So important steps for enhancing their market presence.
Okay, let's talk valuation then. Their PE ratio is sitting around 6.8x. For a tech company, especially one with this kind of growth story, that seems, well, really low. What should we make of that?
Yeah, that 6.8x PE is, well, it's deceptively low. And for your analysis, it's really critical to understand why. A PE ratio, price to earnings, it measures the share price relative to the earnings per share. Now, 6.8x is way below most tech sector medians. But as we discussed, their recent earnings were massively boosted by those one-time, non-operational Bitcoin mark-to-market gains.
Ah, right, the paper profits.
Exactly. If you could somehow strip out that Bitcoin revaluation from their earnings, which isn't easy to do precisely from the outside, the PE for their core tech business would be significantly higher. It would completely change the valuation picture.
So using a simple PE ratio here is almost misleading.
It tells you very little about the underlying tech business on its own. It tells you KULR is effectively valuing two very different things, tech innovation and Bitcoin speculation under one roof.
But despite that complexity, analysts seem really bullish. I saw average price targets around $40 against a recent price back in July of $6.45 and even lower, $5.39 on the day of the Q2 report. That $40 target sounds incredibly optimistic.
It is a huge potential upside they're projecting.
Are these targets based on fundamentals or is it more about the story?
That's a great question. And yeah, two analysts specifically have slapped strong buy ratings on it with that $40 target for the next 12 months. But it's really important to note these targets seem to rest largely on momentum and sort of thematic positioning,
Meaning?
meaning the excitement around the combined Bitcoin and cutting-edge tech narrative. It doesn't appear to be based on detailed fundamental modeling like, say, a discounted cash flow analysis. The data for that just isn't readily available in public sources for KULR right now.
Okay, so more speculative targets based on the hype and potential.
That seems fair to say. Exciting, but worth taking with a grain of salt regarding the methodology.
Okay. And what about the technicals? The chart watchers? I saw the stock seems to be in a strong short-term uptrend with some forecasts predicting like a 364% potential upside in the next 3 months. That's another eye-popping number.
It is, and the predicted trading range based on that momentum is somewhere between, say, $17.31 and $43.06. And this comes with very high volatility. Daily price swings of roughly 5% are common.
Okay, not for the faint of heart then.
Definitely not. Also, the 14-day RSI, that's the Relative Strength Index, a momentum indicator. It was recently around 23.57. That signals extreme oversold condition.
Which usually means a bounce could be coming.
Often, yes. It hints at a potential short-term bounce. For traders watching levels, key support seems to be around $4.90, and the 50-day and 200-day moving averages are at $5.19 and $2.46, respectively. Those provide other reference points.
All right. So beyond the numbers and the charts, what else has been happening with KULR recently? Any key developments investors should know about on either the tech or the crypto side?
Yeah, quite a bit, actually. On the Bitcoin front, they successfully deployed 3,570 mining machines down in Paraguay.
Paraguay, okay.
Yeah. That significantly boosted their mining capacity, their operational hash rate, up to 750 petahash per second.
Which is a lot.
It's a measure of computing power for mining, 750 quadrillion calculations per second. And they have ambitions to get that up to 1.25 exahash per second. That's even higher by late summer.
Wow. So they're serious about the mining part too, not just buying Bitcoin.
Absolutely. It underscores that aggressive dual strategy, really leaning into the Bitcoin-first identity.
And what about the core energy tech? Any signs of real traction there? New contracts, shipments?
Yes, definitely some movement there too. They shipped their K1S 500 XLT battery, which is specifically for the private space sector. That's a big growth market, right? Think next-gen satellites, lunar missions.
Yeah, absolutely.
They also delivered ballistic-proof batteries for defense applications, showing that they can meet really tough safety standards. And reinforcing their niche in extreme environments, they delivered a pressure-tolerant subsea battery to a key strategic partner.
Okay, so specialized high-performance stuff. That demonstrates the core tech is real in finding markets.
Exactly. It shows their technological strength and relevance in these demanding sectors.
So let's tie it all together. What could really move the needle for KULR? Short-term, long-term. What are the key catalysts we should be watching, keeping this dual identity in mind?
Okay, short term. Upcoming earnings releases will definitely be watched closely. Any surprises there, positive or negative, could cause movement. Also, the impact of getting into the Russell 3000 index, are institutional buyers actually stepping in? That could provide a tailwind.
And Bitcoin's price, obviously.
Absolutely. The volatility linked to crypto market swings will always be a factor here, given their massive holdings.
Okay. And longer term?
Longer term, watch for expansion of their partnerships in the AI ecosystem, maybe through EDM technology. How well do they perform in sustainable energy solutions? That's a growing area. And of course, the long-term appreciation or depreciation of Bitcoin will be critical to their balance sheet and reported earnings. Oh, and the commercial adoption of that XIA exoskeleton. If that takes off, it could be a significant new revenue stream.
Okay, lots of potential drivers. But this all sounds quite exciting, lots of innovation, aggressive growth. Let's talk about the other side. Where are the red flags? What are the main risks investors absolutely need to factor in?
Yeah, it's crucial to look at the risks here. And the heaviest one, undoubtedly, is their exposure to Bitcoin. It just introduces massive earnings volatility and significant non-core business risk. As we talked about, their net income swings heavily based on Bitcoin's mark-to-market price, regardless of how their actual battery business is doing.
Right. So you can't just analyze it like a normal tech stock based on product sales and margins. You need like 2 different hats, a tech analyst hat and a crypto speculator hat.
That's a pretty good way to put it, precisely. There's also, frankly, incomplete disclosure on their core operating profitability and cash flow. It makes it harder for investors to really gauge the underlying strength and sustainability of the energy business separate from the Bitcoin noise.
Lack of transparency is always a concern.
And the price discovery for KULR. It seems subject to hype and big trading swings. The stock price can get detached from traditional fundamentals, driven more by market sentiment or speculative trends. Makes finding a fair value really tricky.
And what about broader market risks, things outside their specific model?
Well, you have to consider the inherent high volatility in both the tech sector and the crypto sector. AQR lives at the intersection of two volatile worlds.
Double the fun or double the risk?
Could be either. There are also regulatory risks around digital assets. The rules for crypto are still evolving. They could change quickly and impact KULR's strategy. Investors should also be aware of potential dilution. They might issue more shares in the future, maybe through fundraising efforts, especially since they use an at-the-market or ATM equity program.
Right, selling shares directly into the market to raise cash, possibly for more Bitcoin.
Possibly. And finally, those operational margins, around 18% in Q2, they are below industry averages for similar tech hardware companies. That suggests there's room for improvement in efficiency and cost management.
Okay, so we've looked at the tech, the Bitcoin, the financials, the potential, the risks. Let's bring it all together. What's the final verdict? Is KULR a good investment right now?
Well, based on our analysis, weighing the potential against the risks, we give QLR an overall rating of 6.5 out of 10.
6.5.
Okay. The company certainly offers significant upside potential. You see that reflected in the bullish analyst targets and the strong short-term technical momentum. And that low PE ratio, even if it's skewed, might offer some psychological support, suggesting maybe it's not wildly overvalued on that simple metric, especially if the core tech business keeps scaling.
But there's a big but coming, isn't there? You don't sound completely sold for just anyone.
Absolutely. That 6.5 reflects the but. KULR's aggressive financial positioning, especially with those huge Bitcoin holdings, makes the company exceedingly risky. The lack of real clarity on their core operational financials, the high volatility baked into their model, and just the generally uncertain broader market sentiment right now, those significantly moderate the score. The investment case feels primarily driven by momentum and, frankly, speculation rather than mature, predictable operational results you'd want for a core long-term holding.
So who is this for then? What kind of investor might find KULR appealing, knowing all these risks?
I'd say it's best suited for short-term trading. For risk-tolerant investors who are comfortable with, and maybe even seeking out, high reward but also high volatility exposure. The current market conditions, the unpredictable catalysts, especially those tied to crypto moves, make it pretty unsuitable as a core buy and hold investment right now. It really is a high risk, high reward play. You need to actively manage it and have a strong stomach for potential swings.
Yeah, KULR Technology Group is definitely not your typical investment. It's this fascinating, maybe slightly confusing blend of traditional tech innovation and this huge volatile crypto treasury component, a complex case for sure.
As you consider KULR Technology Group, maybe think about this central tension. Will their core technology innovation eventually provide a stable bedrock for growth? Or will their aggressive Bitcoin strategy continue to be the main driver and perhaps the main risk for its future? How those two forces play out will likely determine its path.
That's a great thought to leave our listeners with. All right, that's all for today on Investing Talk Podcast. Thank you for joining us.
Thanks for having me.
And we look forward to next time.